We've also had questions about inflation, Don, and how do
Yes.
you
Yeah.
invest during an inflationary period? And, in my many years, I've been through inflation several times, and this is probably the worst. But I remember in the 70s,
Yeah.
inflation was very high. What are your recommendations in an inflationary time, and like we're in now?
Well, and that's a great question, and I've got a story that I'd like to share with that, because sometimes people get scared and do the opposite of what they should do. Now is when you need to be invested more than any other. So many times people say, well, what is inflation? Inflation is the rising cost of goods and services. That's easy to understand with anybody that has a car and has went to the pump and got some gasoline. Those prices have gone up. That's inflation. And without getting into all the economics of it, inflation starts rising, and what happens, the danger, it's got good and bad points, but one of the dangers is the purchasing power of your dollar decreases because of that. And again, going to the gas station is a very convenient lesson for us today. I used to fill up my car for $50, now it's 80 or whatever those numbers are, and I'm putting the same gas in the same car, but now I'm paying an extra $30 or whatever the example is. So you have to be invested first, and we'll talk about some different things you can do. But many times people say, well, inflation, the economies, and they'll pull out. That's the worst thing you can do. I was recently shared this story with you. I was speaking with an organization that had over $1 million cash. They had plenty of assets, very low debt ratio. And so I told them some of that cash needs to be invested. That was way too much cash on hand for their organization, their financials. We looked at them. And so we agreed that they should put some of that to work. And one of the individuals said, well, listen, won't that be at risk? And I said, well, here's a great example, and here's a great way to think about inflation. And they just didn't understand the way that worked. I said, if you have $1 million sitting in the bank, and we're going to say today inflation is about 8%, it will probably increase, but let's just assume that over the next year it stays at 8%. That $1 million sitting in the bank a year from now is going to be worth $80,000 less. So it would be $900. Basically, the purchasing power of that $1 million would be $920,000 a year from now, because inflation erodes that purchasing power or takes away from that, so that no longer will $1 million buy what it did without all of that inflation. So you have to understand what inflation does and why it's important to be invested to offset some of that. So explaining that to him made sense. I said, I get it. So during inflation, it's always important to be invested. We should always be investing, but it is paramount when you have inflation like we do, and as it's rising, because our purchasing power, our dollar is going down, the purchasing power, ability to buy.
One of the things about inflation also is if you know that there's going to be an inflationary period, then you invest in those things that are, if you're an investor in stocks or in funds, you want to invest in those that are pretty much go with the inflation. Staple goods, for example, people who have to have things, paper goods and things that they will rise with the inflation. So you go to companies that you may not make as much money, the potential upside is not as great, but they're much better in that way. People are going to need telephones. They're going to need, I know I recently invested in AT&T because we're going to need telephones, and AT&T has paid dividend for 45 years and hadn't missed one, and they continue to raise it. So my point is that's a staple. Then if there are certain things that you can get into that are very high risk during an inflationary time because they are very volatile if in inflation. For example, Don, a lot of people start buying gold in an inflationary period, and it will grow usually to a point, and then it will stabilize. That's
there. Exactly right. And those things are good. You want to have One of the things in investing that we tell people, I love a lot of the behavioral science behind that and how we think, because I've made a lot of mistakes, watched clients make a lot of mistakes on things that you know you shouldn't do, but you do because you don't see the behind the scenes things. So when we talk about investing, what we're looking at doing is finding that discipline that helps us, especially when it comes to retirement. Now, you may have your retirement set, you may play in the market a little bit, buy a few stocks, that's great. But for your retirement, there's a discipline that is required that you want to maintain. And one of the things that we always want is what we call inflationary hedges in our portfolio. Gold, silver, crypto. We'll talk about crypto in a minute. That's a big subject matter. Those are great inflationary hedges to help us, but you don't want to chase that hot dot. I received a phone call from an individual just recently, and he had a sum of money, and he said, should I just put it all in gold? And I said, that's an old mentality. When we were held to the gold standard, that meant that the dollars were backed by gold standards. We're not in that anymore. We're in a debt system. The market is a debt system now, and it's different. It's not that it's bad. It's not as good, but it's certainly different. And so you don't want to just go all in on something. You want to continue. When you become reactionary, is usually when you get in trouble in investing. And so you want to have those hedges. Stocks are still going to be good. Bonds are very good because that's an inverse relationship. When stocks are up, bonds are usually down. When stocks are down, bonds are up. And you can't time the market. What people make a huge mistake, and I hope if you don't hear anything else, you hear this, is that by the time you react, it's too late. So you don't want to be in that. You're already behind the power curve. You want to have your portfolio set up for those things. And if you do it right and you put the right things in there, you can certainly have a portfolio that is hedged against inflation and can weather those storms. But gold, silver, crypto, those are great things to have in there, but you want just a small portion of them. You don't want to overemphasize them because they have some downfalls. And I'll talk about crypto in a minute because that's such a hot item. I'm not an expert, but we can give some guidelines on it. I hope that you will continue to send in your questions. They mean a lot to us because we can talk about a lot of things, but what we really want to do is find out what's important to you, the level of understanding, the questions that you have. So hopefully that we can add value to your investment knowledge and that you can increase and grow in that and stay curious and read as much as you can, get as much information. But when you have a question, please feel free to just send that in to us. Send those questions in because we really do enjoy them, and answering them helps us to make sure that we're being relevant and pertinent to you.